into it. Julia, look, how much of the Bernanke testimony coming up tonight impacted trade today?
I think we're seeing light volumes as the markets really treaded water ahead of Bernanke's testimony. But today really was about those commodity-based stocks. BHP coming out with some good production numbers, a third record production in terms of iron ore from WA. So we saw BHP up by 2.3%, Rio Tinto up by 1.1%. But it was some of those leverage plays into iron ore which really stood out. We saw Jindawi up by a massive 9.7% and Atlas Iron up by 7.9%. We will be watching the Bernanke speech tonight because we're expecting it to have a big impact in terms of currencies, commodities, and of course the equity markets. And some of the key things that we're watching for in this speech is whether he's going to keep to this 6.5% unemployment rate threshold or whether we are going to see a change there. So we could potentially see a change there. We're also watching his outlook in terms of the economic state of the US economy and whether he does see downside risks there, which could mean stronger for longer quantitative easing, or whether we are going to see tapering and whether he's going to reiterate that September could be the date that we start to see an easing off of quantitative easing. So they're really the key points that we're looking for whether he's going to stick to the jobs targets for the US economy, what he thinks of the US economy, and whether he's going to stick to September tapering. So it's going to be a big one for markets tonight. I'm watching Ben Bernanke's testimony to the House of Representatives.
Is he going to strike BHP Billiton? Good day on market, up about 2.25%. We're going to talk about BHP Billiton a little bit later in the show. I wanted to get your thoughts. Billabong, an outstanding session coming off the back of the announced Altamont agreement. Lord Inman sacrificed as a result. Look, what have you made of this deal for Billabong?
James, in the past couple of weeks, we've been talking about how with Billabong it was a binary outcome. Either they fixed up their balance sheet or they didn't. And it looks like it's been the first option. They fixed up their balance sheet through this financing deal with Altamont, and of course the shares absolutely popping on the back of that news, up by a massive 34%. Remembering it is coming off a very low base, the shares are at 33.5 cents at the close today, and that's nowhere near that TPG offer that came through at $3.30. So it has been a steep and a fast fall for Billabong. But really what this announcement means today is that they're out of the situation where they could possibly be facing insolvency. So in terms of the balance sheet, they do get a short-term reprieve, and in the longer term this will be converted to longer-term funding. So a bridging loan initially, which will become a longer-term loan next year. What this means for shareholders is essentially that Altamont and that consortium could own around about 40% of the stock if they do decide to exercise all of their options and convertible notes. So it is dilutive. Also a new MD on board, Scott Oliver, so we're going to be watching to see a new strategic direction coming through from Billabong. And that's the key from here. Now that they're not looking at insolvency, they've got a reprieve in terms of the balance sheet problems. Really, it's around turning around their business. We know that in the last financial year, they were predicting EBITDA of $67 to $74 million. They've really got to get those numbers up, especially in the face of the type of liabilities that they have on their balance sheet and also off their balance sheet, because one of their biggest liabilities is all of the leasing commitments they have around the globe with these retail stores that nobody wants at the moment. They're probably going to have a hard time offloading. So Billabong, a get out of jail card today, up by 34%, a great outcome. The next step is really turning around its business and its brands.
And on that, how difficult a job do you think it has in front of it, Julia? I mean, I imagine you're a bit of a cool kid at school wearing all the Billabong gear. It doesn't seem it's all that cool anymore. I mean, there's a fair bit of brand trust, recognition, placing in the market they need to work on.
It is, and it's funny, you know, you see these 30, 40-year-olds walking around in Billabong.
I love Billabong, but I'm not their target market.
It's probably their children that they're targeting, and that's the difficulty, trying to renew and refresh the brand. And I think Levi's is a brand that's done it very well. They've gone from being an old brand to targeting the newer generation, and really in terms of Billabong, it's about refreshing that brand. So we'll be watching what Scott Oliver does in terms of his strategic direction, but also, you know, we know the structural headwinds that's been facing this business as well, with all their retail physical stores and trying to get on to the online business and try and cut down on some of those retail stores. So still watching their asset mix, because we know that they're trying to sell off their Canadian assets, the West 49 brand, but also just renewing and refreshing that brand and getting it to the right demographic.
And look, IAG also a good session. Not quite the percentage increase that we saw from Billabong. They're up just the 1.7% IAG, but a profit upgrade. This stock has been doing well for some time now.
Insurance Australia Group, last 52 weeks, the stock's actually up by 64%.
Wow.
So it has been climbing really well. And that's on the back of that. We haven't seen huge catastrophes coming through. And really, in terms of claims, this is all related to the weather. And the weather has been relatively good compared to the last couple of years. So Insurance Australia Group, another profit upgrade. They're predicting their insurance margin at 16.8 to 17.2%. And that's compared to their previous upgrade, which was in February, which was 12.5% to 14.5%. So great to see Insurance Australia Group doing well. If you're investing in this type of company, it's general insurance and it's targeting Australia and New Zealand. 82% of their gross written premium comes from Australia, compared to something like QBE Insurance, which has a much bigger US exposure, 40% of its gross written premium coming through from North America. But Insurance Australia Group, second profit upgrade of the year, and the stocks have been doing very well in the last 52 weeks, up 64%. It's not surprising not to see a huge reaction in terms of the shares. The shares up 1.7% today.